The future of crypto trading isn't human anymore. It's algorithmic intelligence watching every block, tweet, and transaction. Across the crypto world, new AI indicators are emerging, combining data science, blockchain analytics, and real-time machine learning. These tools don't just track prices, they interpret market psychology, on-chain behavior, and liquidity flows faster than any human ever could. Let's break down the 5 most powerful AI indicators driving the next generation of crypto analysis. First, the AI Sentiment Index. It scans millions of news articles, tweets, and community posts in real time. Using natural language processing, it converts emotional tone into data, showing whether traders are feeling fear or greed. Traders watch for sudden sentiment flips. If optimism collapses before price does, volatility often follows. When the sentiment turns green and volume confirms, it can be your first early entry signal. Next, the AI on-chain signal. It reads blockchain activity directly. It analyzes active wallets, big transfers, and accumulation patterns, then compresses everything into one bullish or bearish score. When on-chain AI turns bullish and whales are buying quietly, that's a strong hidden setup most traders miss. Then comes the whale movement score. AI that tracks not just wallet size, but intent. It identifies whether whales are sending coins to exchanges, often a signal they're preparing to sell. If multiple high-value wallets start offloading to exchanges, the AI triggers a caution flag, and smart traders step back. The order book imbalance indicator reads hidden buy and sell pressure across exchanges. When AI detects strong buy walls building across markets, it signals potential short-term upward momentum. Scalpers use it for second-by-second trading. Swing traders use it as confirmation that the trend is real. The machine learning volatility indicator forecasts where risk and volatility will surge next. It analyzes historical returns, funding rates, and macro data to estimate when markets are about to explode, up or down. When AI predicts rising tail risk, tighten your stops, cut leverage, and prepare for movement. AI correlation maps reveal how coins move together, showing where liquidity and momentum are shifting. When tokens start breaking away from BTC correlation, it often marks the birth of a new trend. But remember, AI is powerful, not perfect. It can't predict black swan events or fake sentiment data. Models can overfit, misread context, or be manipulated. Always confirm with your own analysis. The best traders use AI as an assistant, not an oracle. It's there to enhance judgment, not replace it. The next era of trading belongs to those who can read both, the charts and the algorithms behind them. Follow for more deep dives into AI, blockchain, and the data shaping the future of finance.